Haseeb Qureshi made his first 100 grand at just 16.
I used to be a professional poker player. When I was 19, I was ranked one of the top 10 online no-limit hold'em players in the world. The people who are most motivated by money are the least likely to succeed. And I tell my dad, Dad, I have something to tell you.
By 21, he'd walked away from millions. He gave most of it away and started again with $10,000. Today, he's a managing partner at Dragonfly, a $4 billion crypto fund backing some of the biggest names in Web3.
At which point did it become hard?
The really hard thing is to just be wandering through the valley of darkness and not know what you're supposed to be doing. I knew exactly what I had to do every single day. There was no question of what I was supposed to be doing.
Is the legacy you're leaving now sufficient?
That's a really tough question, actually.
Hey, I'm Alessandro, and I research and host shows for 𝗏𝗏𝗧𝗏, and this is Risk Takers, a series about the founders, builders, and investors behind crypto's biggest ideas. This isn't about price charts or market calls. It's about the risks they took, the mindset that drove them, and the stories that shaped their journey. Thank you for being here. Enjoy the show.
Hey, Haseeb, thank you so much for being here. Really appreciate it.
Having me.
It was a pleasure. Your background is, you've got a very, very interesting background. I wonder if you could just go into your background, into how you got into poker, how that sort of like shaped your investing journey as well a little bit.
Yeah, absolutely. So my background, before I ever got into crypto, tech, any of this, I used to be a professional poker player. So I did that for 5 years, from when I was 16 years old until I turned 21. When I was 19, I was ranked one of the top 10 online no-limit hold'em players in the world. I was sponsored, played high-stakes poker games, traveled around the world. So that was very much my upbringing. It was I dropped out of school, I just focused on poker full time. And it's probably very similar to a lot of guys I know in crypto who started in crypto very young, made a lot of money early, and kind of cut their teeth in this very PvP kind of, this world of uncertainty and risk. That's very much where I developed my skills as a, not as an investor at that time, but I think a lot of the skills are very analogous between poker and crypto. So that was where I got my education, more so than university, I think, at the poker table.
How did you, A, get so good at poker at 16, between 16 and 19? Obviously, you were a millionaire by 19 via poker.
Yeah.
What was the sort of period between maybe like 14 and 16 that allowed you to sort of go down this route and become so good at poker? Maybe it started earlier.
Yeah, I don't know that it did. So I mean, when I was younger, I played a lot of video games, played a lot of computer games when I was in school. I was kind of I was a good student, but I was a largely checked out student in the sense that I just didn't I didn't really have that much confidence that academia was all that valuable or all that important. And so I remember I got invited to play a poker game with some friends of mine, and they were playing with some chips, and they were supposed to represent money, but we were all poor, so we didn't have any actual money. We were kids, and it was the first time I ever played poker. I was 16. I played maybe some 5-card stud with my cousins, but we were never gambling. We were like, I bet I'd check. We didn't do any of that stuff. And so it was my first time ever playing poker, and I nearly lost all my chips. And I felt very stupid, and the way that, adolescent, and you just feel extremely embarrassed, maybe more than you should. And I was like, okay, I'm going to go learn how poker works so that I never get embarrassed that way again. And so I remember I went online, started reading about poker strategy and tried to understand, okay, what are you supposed to do? How do the cards work, et cetera? And I started playing some play money games online just so that I could be like, okay, next time I play poker, I'm going to know what I'm doing. And I ended up coming across this article when I was reading about poker strategy, talking about this generation of young poker players who were mostly, college age. And they were playing poker mostly online, making a ton of money. And they were approaching the game from a more statistical, game theory, mathematical perspective compared to the old guard, who was more old school. They grew up in card rooms in Dallas and in Vegas. And, this very, very traditional way of playing poker, which is being superseded by this new, more mathematical way of approaching poker. And I looked at that and I was like, that seems really cool. I bet I could do that. It kind of seemed like a video game. It kind of seemed like, okay, it's like learning how to play StarCraft. And it's like, yeah, that's literally what I was doing, when I was in high school, is like, staying up late playing StarCraft instead of doing homework. And I was like, okay, I want to learn how to do that. And so the way that I got started was, I called my older brother. He was 18 at the time. And I told him, like, hey, I've been learning how to play poker. I've figured out all the strategy stuff. I think I know what I'm doing. I've made some money in the play money games. Can you give me $50 so I can start, actually building up my bankroll and see if I can do this. And he was like, what? You're gambling? What are you doing? You're supposed to be in school. Like, don't tell our parents this. Like, never ask me this again. And I was like, all right, screw you. And so I was like, okay, I got to find some way, because I was underage. I didn't have any money, obviously. So I got to find some way to deposit money so I can start playing. And so I found the first, I went on Google image search, because there was this website at the time called Party Poker. And Party Poker, they had a promotion that if you scanned in your driver's license, you're a first-time poker player, they would give you $50 for free as like a promotion to get you to start playing poker. And I was like, okay, this is great, but I don't have a driver's license and I'm obviously underage. But this was early days of Google image search. And so I went on Google image search and I found the first uncensored photo of a driver's license, which was this little old lady from Maryland. And I sent that in. And that was how I got my first $50, my first and only $50 that I ever deposited into poker. And started from there, I slowly grinded it up, playing the 5-cent, 10-cent games, working my way up to the 10-cent, 25-cent games. And slowly but surely, by the first year, I turned $50 into $2,000. And then by the end of that year, I turned that $2,000 into $100,000. And that was when I realized that, oh wait, I can do this.
I mean, that's a phenomenal story. But what was it that made you not go to your parents and say, hey, can I have $50?
Well, my parents were very religious, so they were not very excited to hear their 16-year-old, going online gambling. So I actually didn't tell my parents until I had made my first 100K. That was the internal benchmark for me of like, okay, now I can tell my dad, because that was the point at which I was making more money than him. And I'd be like, okay, he has to accept this. But it was very nerve-wracking, because I did not think they would be down with me making money that way, especially while I'm in school, So obviously they became okay with it when they realized that I was doing it in a way that's not just YOLOing and, just gambling. I was doing something that was obviously a skill game as opposed to a game of pure chance. Otherwise, there's no way you can run up that amount of money if it's not a game of skill. But I think temperamentally, when I was playing poker, I was always surprised that all my friends, I was telling, oh, I'm playing poker, I'm making all this money, you guys should do it too. That most of my friends just instantly lost all their money. Like, they were just unable to really have the discipline and the rigor that you need in order to actually build up that skill set as a poker player. And so one of the things that I realized about myself, and I don't know where exactly it comes from, I think a lot of it is dispositional, is that I'm very, very patient. And to be a good poker player, you have to really hone in on the mental game. I think it's very similar to trading in that way, is that you have to understand yourself. A lot of there's a lot of mechanics and a lot of the tactics in poker, like understanding like, okay, what ranges should I be playing? How should I play this hand? How do I maximize value here? What betting pattern does this indicate about this person's range? There's a lot of stuff like that you have to learn. It takes time to learn that. But the really hard part, and the part that like you almost can't teach people, is how to master their own emotions. That part, if someone does not have that, they will not make it as a poker player. They will, no matter how good they are, they will lose all their money. And once you lose all your money, that's it. It's over. So that was one thing that I was uncommonly good at.
Were there any periods in that timeline where that was tested at all?
A bunch of times. I mean, when you play poker, poker is a game of enormous swings. It's a game of skill, but it's a game of skill that, it's like crypto. Crypto mostly goes up, but it goes up with a lot of pit stops along the way and a lot of really long pit stops along the way. In poker, we call those downswings. And you can have very, very long downswings just because of the stochasticity of just randomness. Like when you're playing cards, naturally, you're going to go through some losing stretches or just being unlucky for long periods of time. Now, those losing stretches, if you're doing it well, they're not as bad. They're manageable. A lot of that comes down to bankroll management, meaning not having too much of your capital at risk at any given time. But the reality is that for most poker players, their own worst enemy is just themselves. It's not actually just the pure unluck that you experience in poker that's going to kill you. It's you chasing losses, getting angry, having these moments of despair where you can't turn off the computer and just like go shut down your mind and relax and be like, hey, it's cool. I lost that money. Tomorrow's a new day. If you can't hit mentally that reset button and forget about your losses and just move on and say, okay, tomorrow's a new day. I have, I had 10K yesterday. I have 5K today. I just have 5K. There's no, oh, I lost 5K. It doesn't matter. You have to just remove that completely from your brain and like just be very zen about this moment is the only moment. It's the only moment that matters.
What allowed you to do that?
What allowed me to do that? One, it's being determined to do that and realizing how important it is. And it's a skill that you build up over time, right? I mean, I was very young when I started playing, and like at 16, your neocortex is not fully developed, right? You're still much more. I was much more emotional at 16 than I am today. So some of that just comes with age and comes with maturation, but a lot of that is also realizing how important it is to have that skill. Like when I came into poker, I mean, here's one of the things that I realized as a poker player. There are a lot of people who come to poker because they're motivated by money. And almost the perfect predictive value, the people who are most motivated by money are the least likely to succeed. Now, why is that? I think a large part of the reason for that is, well, there's two things. One is that somebody who's too motivated by money, they're going to be cashing out too much along the way. And it prevents you from being able to compound. Because, to become really successful at poker, you have to work your way up the ranks. You have to get bigger and bigger and allow your bankroll to grow and like play in tougher and tougher games until you get to the really high stakes games. The high stakes games are the hardest. The bigger you go, the stronger the players are. That's the kind of the iron rule of poker. The same thing in any market, right? The bigger the market is, the more professionalized and the more difficult it is to make money in that market.
Well, the more money you have, the harder it is to make money, right?
That's right. At the same rate of return. And so that's one element, is that like if you are too motivated by money, you're going to be playing like the low to mid stakes games. You're going to be taking out money every so often, and you're not really pushing yourself to get better. And to get better requires you to take some amounts of risk and also some amount of loss as you are pushing yourself to play against tougher and tougher players. That cultivation of that skill requires you to have a single-minded goal of wanting to be the best. And it's ironic that the people who want to make the most money are never the people who do. It's the people who want to be the best who make the most money. And if your motivation is that I want to be the best, then you have a shot at making a ton of money. Not guaranteed, but you have a shot at making a bunch of money. So that's the first thing. I think the second thing is that, for a lot of people, they just did not have the discipline and work ethic to like really do all of the homework that's necessary in order to actually improve every single day. So if you just show up at a poker table and you just play cards, you'll get somewhat better, but your ability to get better is very, very muted compared to somebody who what they're doing is they're playing every single day, but then they're going home and they're studying their hands and they're breaking down, what did I do wrong? What did this player do that I wasn't expecting them to? And are you actually analyzing what's going on in your game and approaching it like a craft, as opposed to just showing up and like doing the same thing every single day? That rigor and that carefulness in thinking about your game, again, the only reason why you'll ever do that is because you really desperately want to be better. If that's not what's fundamentally motivating you, then you're just going to have a much slower growth curve and acceleration curve. And so ironically, what I wasn't doing as a student, like that energy and focus, I was really pouring into poker because I was extremely competitive. The other thing too, I mean, it was a little bit unfair because of the fact that I was underage, that I actually couldn't spend any of the money. I was making this money at a young age, but like my parents didn't know I had this money. I was still in school. I was living at home, and so as a result, like I'm not going to buy a car. Like what am I going to do with this money? And so for me, it was purely, at least in that time when I was 16, 17, the money was just purely score. It was like my high score in a video game, and I just wanted the score to get bigger and bigger and like climb the levels. And it was only later that the real connection between the money and the sort of points in the game was reified for me. So that was another element of it.
At what point did you, when you showed your dad, actually, you said to, hey dad, look, I've made more money than you this year. What did you show him? Did you show him your P&L? Did you say that this is what's happened? Did you have to log into your account and say, look, this is actually what's in this account? Did you believe me?
No, it's funny because, so I'll tell you the story. What happened is I remember I was home late one night and I hit this 100K mark, I think a few days ago. And that was internally like my landmark of when I was going to tell my dad. And so I remember late one night, it was like a weekend. I just said, okay, I've been, welling up the confidence to go do this. And I said, okay, it's time to go do this. And so I remember I marched downstairs, it's like late at night, and my dad's sitting on the couch, and I tell my dad, Dad, I have something to tell you.
Gravity is an on-chain trading protocol built with zero-knowledge tech and part of zk-Sync's Elastic network. It feels like a centralized exchange, fast and smooth, but everything happens fully on-chain and privately. I'm using it right now because they've got an ongoing points campaign for active traders. Gravity may not be available in all regions, including the UK. Thanks to Gravity for supporting the channel.
She's like, oh shit, oh yeah, what? And I'm like, all right, you come to my room. And he's like, oh god, and like the blood is draining from his face, and I can see him. So he's like marching upstairs, like on a death march, and coming to my room, and he sits down on the bed, and I tell him, Dad, I've been playing poker. And he's like, oh, thank God. You know, he's like, are you going to tell me I'm gay or something? And so he's like, oh, okay, all right. How much money did you lose? And I'm like, no, I made money. And he's like, oh, how much money did you make? And I made $100,000. And he's immediately like, oh, this stupid kid. He's like playing some scam thing online. He thinks he's giving them money and they're telling him he's making all this money. So he thinks that I'm being scammed and that I'm 16 and I just told him I made $100,000. Obviously, he thinks I'm an idiot because he didn't give me any money. How the hell do I have $100,000? And I tell him, like, no, I really have $100,000. And I like, look, let me prove it to you. I open up the website. I show him the website. And I think it was PokerStars. I show him PokerStars. Like, look, $100,000. And he's like, well, what is this, stupid interface? Like PokerStars, whatever. I don't know what this is. And so then the one artifact that I had, so they had this loyalty store that if you got enough loyalty points, you could buy things from the store. And the only thing that I remember I bought an iPod back at the time when iPods were really hot. And I had it sent to my brother. My brother gave it to me. And this iPod was the only thing that I had because I bought it with loyalty points from the entire first year that I was a poker player. And so I remember he had seen that iPod earlier and I told him that I got in a raffle. And he was like, oh, okay, that's crazy that you got an iPod in a raffle. That's really expensive. And I showed him the iPod. I was like, this iPod, I got it from this store. And I showed him the thing from the store. And that was when he was like, oh, shit. My son made $100,000. Like, what is going on? And I remember he was like sitting on the bed and I was explaining to him how it worked, like poker and I play sessions and bankroll management and blah, blah, blah. And he was just taking it in. And I have to imagine as a father, that's like a really weird moment when you suddenly see your child in a totally different light than the way that you've seen them up till now. And so he was just kind of flabbergasted, didn't really have anything to say. And then he was like, okay, let me think about this. Don't tell your mom. And let's talk in the morning. And so he went downstairs and I assumed I was in a lot of trouble. And I remember the next morning, he was standing outside my bedroom, like, super early in the morning and clearly not having slept. And he just told me, look, I want you to put away $10,000 a month for your retirement. Beyond that, like, I trust you to do the right thing. And that was it.
And did you do that?
I did. So he was very supportive. My mom was a little less happy about it, but I think in the end, it obviously turned out the way it turned out.
So you put away $10,000 a month for your retirement. Is that still in a retirement pot now?
It's not. So funny that what ended up happening, this was like, what was this, 2006 and 2007? I ended up investing a lot of that money into real estate. And so I ended up buying a bunch of real estate in Texas, which is where I grew up. And then, of course, the great financial crisis happened, which that real estate did not do super great during that period of time. But what ended up happening was much later. There was a lot of other stuff happened as I was quitting poker. But much later, after I decided to leave poker and go into, the next chapter of my life, after I quit poker at 21, I ended up giving away most of the money that I'd made as a poker player. And I started over with $10,000. And so that retirement account I emptied out at that time. And the $10,000 was very much, for me, a forcing function of, I got to reinvent myself. I got to do something. I don't want poker to be the one thing that I did that, like, basically I had this image of myself in my late 20s, early 30s, being in like some crappy office cubicle, unjamming a stapler and thinking about like, oh man, I used to be somebody. I used to living on a nest egg and just kind of like, okay, I was a poker player. Now what am I doing? I'm just like, have some generic job. And I was like, I don't want that to be the shape of my life. I want to do something bigger. And I know the only way that that's going to happen is if I have to. And so I sort of knew psychologically I needed to be under the gun to have to prove myself and rebuild something. And that's what ended up leaving me to come out to Silicon Valley, learn how to code, get into the tech industry. And eventually that's how I found my way into the crypto industry.
So just going back, so you built a first bankroll.
Yeah.
You're 21.
Yeah.
And you decided to give everything away except $10,000.
Correct.
How did you A, come to that decision, and B, even make that decision? Like, was it hard, or was it the obvious choice?
It's definitely not an obvious choice. So when I quit poker right around the time of this big scandal in poker called the J-Rod scandal. It's kind of a long story, but basically what happened was there was a student of mine who cheated some people that he was playing poker with. And cheating is like the cardinal sin in poker, because poker is a very trust-driven industry. You got gamblers who are giving each other, $50,000, $100,000 loans, all in each other's names, all just on their word, right? There's no legal contracts that people are writing in the poker world. And so, being associated with somebody who's cheated is just kind of a huge mark against your name. And I try to defend him to other people. I basically said, like, hey, let's try to settle this without going public. Please don't tell you. He was very young, the guy who cheated, and I ended up sort of being affiliated with him, and that was a big mark against my name. And after that, there was also around the same time that the Department of Justice shut down a bunch of the overseas poker sites. So it was like, Party Poker and PokerStars and Ultimate Bet and Full Tilt Poker. They all got shut down by the Department of Justice. And all the professional poker players in America had to leave America if they wanted to keep playing online poker professionally. And I just knew that, like, hey, this is not the direction that I want my life to go in. And I want to do something more valuable for the world than what I've been doing as a poker player. And, leaving poker and also leaving right on the tail of this whole blow up that happened with this guy who I was working with, it left me with just no real identity anymore, because I dropped out of school. I had no real friends outside of poker. That was like my community was poker players. And after I quit, I was just like a young guy with some money, with no education, with no skills. Like, I was kind of, to everybody else, I was like, what do you have, a trust fund or something? Like, why, what are you doing? Why are you not doing anything? And it was very jarring for me to, like, think about what am I doing with my life? What am I doing to be valuable in the world? And, poker players, they do a lot to try to convince themselves that what they do as poker players is valuable in some way, or is, like, morally acceptable. And that never really sat right with me. That as poker players, what you do is, you sit at a table like this, and you sit down with somebody who's like, a dentist or a doctor or a lawyer who's gone out and made their money doing something really valuable in the world. And they come sit at a poker table and they lose their money to me because I'm good at cards. And, I'm not doing anything useful in the world. And that always bothered me, that, I'm not really, what is my legacy going to be when I look back on my life and say, oh, how did I make my money? What did I actually do to make the world better? And I didn't have a good answer to that. And so I ended up writing a book about poker that I later published called The Philosophy of Poker, which ended up actually being a very popular book in the poker world. And that was like my almost the sort of magnum opus of everything that I learned during my career as a poker player, because I was a pretty well-known guy in the poker world. And after publishing that book, I decided that the only way that I'm going to prove to myself that I'm going to actually do something valuable in the world is if I have to, is if I have no choice. And I knew a lot of guys who were poker players who had quit poker and they came back because it's just too easy to make money. When you're really good at poker, it's kind of, it's like this easy mistress to come back to. And I did not want that to be my story. And so when I quit poker, I made a bet with somebody I knew, who was a total stranger, that if I ever came back to poker again, that I would have to pay them $100,000. And that was like my forcing function of burning the boats and forcing myself that, no, I have to go do something else in my life. And so I didn't know what that was going to be. I had no idea what I was going to do. I thought maybe I should go to law school, maybe I should go to business school, maybe I should do whatever. I had no clue. The world was sort of a blank sheet of paper. But the thing that I did know was that I really love technology. I didn't know anything about technology. I didn't have any skills in technology, but I really love technology. I actually studied in university. I studied English and philosophy, totally non-technical background. But what was happening in the tech industry was so fascinating to me and so exciting. And, you know, I grew up on the internet. It was so many of my formative years were spent like in the early online kind of era, that these companies, they're the companies I grew up with. And I was so captivated by the idea of startups and building something new and having something valuable, but I didn't know how to do anything. And so I decided that I was going to go to Silicon Valley. I was going to go to a coding boot camp, learn how to code, and I was going to force myself to become a part of this industry and do something useful. And so that's what I did. And that was sort of my ticket to the next career that I had after poker player, which is to become a software engineer.
The biggest risk to your crypto isn't just your wallet. Your connection is also massively important. Browsing without a VPN leaves what you do exposed to anybody watching the network, especially on public or weak home Wi-Fi. NordVPN encrypts your connection so traffic stays private and your data cannot be read even if it's intercepted. At around 9 cents a day, it's about the cheapest layer of protection you can add. You can get 74% off a 2-year plan plus 4 extra months free, backed by a 30-day money-back guarantee. You can go to nordvpn.com/Alessandro to claim this. That's nordvpn.com/Alessandro. Thank you to NordVPN for sponsoring this part of the video.
On that journey then, like from going, I mean, which point was the hardest? Was it giving away the money and starting from scratch? Was it somewhere in that sort of like coding journey? Was it maybe when you were a bit further down the line and suddenly you actually had some money behind you again and you could make decisions that would essentially potentially wreck you?
Yeah.
At which point did it become hard? Or which point was it hard?
I mean, I remember it being hard kind of all the way through. The really hard part was honestly right after I quit poker, when I think the hardest thing for a human being is not literal hardship, but a lack of meaning is the hardest thing for human beings. If you're experiencing something very physically difficult and like very onerous, but you know exactly why you're doing it, you know who you're doing it for, and you know exactly what you're doing the right thing. That's actually, it's hard, but it's easy. The really hard thing is to just be wandering through the valley of darkness and not know what you're supposed to be doing and not know why it is that your life is meaningful or valuable. Ironically, in that time, I had total freedom. I had lots of money. I had no pressure. I had no obligations. Nobody wanted anything from me. And I was deeply, deeply unhappy. And I had no idea what I was going to do with my life or if I was ever going to find anything important to do. And so ironically, when I gave away my money, it was actually incredibly clarifying experience, is that even though I was all of a sudden under financial pressure, and I remember, there's like this restaurant in Austin called Luby's, which is like this cafeteria mostly old people eat at. And that was where I went for lunch and dinner every single day, is I go to Luby's because they had this like, $6 all you can eat thing where I just get like, chicken and Spanish. And it was like I was all of a sudden living like, like a student, living on a shoestring budget. But my life was so much more purposeful than what it was in, the year and a half after I quit poker, when I was traveling, just like what I just had no idea what I was and what I was supposed to be doing. So, even when I went to Silicon Valley and I started coding, I remember I went to this coding boot camp called App Academy, and it was incredibly intense. I was probably I might have been the weirdest background of anybody there. A lot of people went there, like they studied something technical, they studied math, they went to, top universities like, Berkeley or Harvard or whatever. And they were like, okay, I want to get into coding. And so I'm taking this coding boot camp. And a coding boot camp, it's like a 3-month live-in experience where you're there, you go every single day from like 9 to 5, and all you're doing is you're coding every day, every single day for 3 months, right? And that's part of the reason why these coding boot camps can churn out software engineers more efficiently than a university degree. Because in a university degree, like you go to class like once a week, you're like two times a week, and you're like kind of doing your homework, and it's not the same level of like monastery-like intensity and concentration that you have at a coding boot camp. And so when I went to this coding boot camp, I was every single day the first person in, the last person to leave. I was there until like 9, 10 p.m. every single night, and I was doing nothing but just coding every single day, coming in on the weekends, because I had no choice. I had no plan B. There was no other option. I was, it was almost all the money I had left. And I had to make this work and get a job. Otherwise, I was out of my ass. And, I'd have to move back in with my parents. And so, although that was incredibly intense, it was also, in that sense, it was also really easy. because I knew exactly what I had to do every single day. There was no question of what I was supposed to be doing. And that feeling is such a powerful feeling. It's like, the same thing people have in the military, that they'll tell you, like, yeah, it was like the hardest years of my life, but it was also the happiest that I've been. I mean, for some people, that's not their experience in the military, obviously, but it's a common enough story that I think this is a deep part of how humans are fundamentally driven.
Yep. No, I couldn't agree more. I think when humans have a need to do something that's like deeply meaningful to them, and when you find whatever that is, it can be anything. Friction just seems to like be removed, and you're on a path, and it just seems to flow. Now it might be each step might be challenging, might be hard, but the process of doing the work becomes so much easier when there's a clear intention behind that work. If you're stacking shelves or something, it feels emotionally can be really, really challenging if you're doing that every single day.
Yeah.
Even though the task is relatively, straightforward and simple, you can just be having this absolute chaotic experience in your head. Whereas if you're going through something physically challenging, whether it's, sitting down and learning or marching, all that sort of stuff.
Yeah.
Actually, the steps might be hard, but the actual process of doing it becomes so much easier.
Exactly.
So on this journey, the start was the hardest.
Yeah.
Then along the way, you obviously became a venture capitalist, right? So now, where's your position now relative to the legacy that you wanted to leave? Because obviously when you left poker, that wasn't the legacy you wanted to leave.
Yeah.
If you were to quit now, right off into the sunset, is the legacy you're leaving now sufficient for you to, have a coffee when you're 60? Or do you have to keep working to fulfill that legacy?
That's a really tough question, actually. It's funny because when you're young, you think a lot about legacy. These days, I don't think much about legacy. I think in a way, when you are talking about the thing, then you fixate on the story. You fixate on like, how is my autobiography going to be written? And I think very much that's like a young man's fixation. Is like, okay, building the statue of yourself in your head, and then trying to live up to that statue that you've erected in your own mind. And I think I was very much operating in that way in my 20s. I'm now in my mid-30s, and I feel like as I have, particularly since being here at Dragonfly, building up this firm to what it is today. We're one of the largest firms in crypto. We manage over $4 billion. We've been, we have like almost 50 people around the world in many, many countries, and we're now like we surpassed as a firm the goals that I originally set when we started Dragonfly, like back in 2018. And the thing that was very different about Dragonfly from almost any other job that I've had is that pretty much from the moment, or maybe like within the first like 2 years of Dragonfly, I became extremely confident that this is exactly what I'm supposed to be doing. And that I've never had that before in my entire life. The way I describe it to a friend of mine is that almost everything else I've ever done felt like it was part of the ladder I was climbing to the eventual thing I was going to do. And the eventual thing I was going to do was going to be like the thing that everything paid off for, right? The skills that I got as a poker player, the skills I got as an engineer, after I was a engineer, I started working at Airbnb, and I never thought like, I'm going to be at Airbnb for 20 years and I'm going to become, climb the ranks and become the CTO. Of course not. That's ridiculous. I always knew that I was going to do something else. I was going to build something, but I didn't know what it was. I didn't know when it was going to happen. I didn't know how it was going to happen. And all of a sudden, within the first couple of years of Dragonfly, I realized that, this is the thing that I pour everything into. All that like power and chi and energy and knowledge and skills and relationships that I've been building up over my career, this is the thing that it was for. And when you feel that, it's an enormous, the thing I was saying before, of even when it's hard, it's easy. This is the first job for which that's ever felt true. That even when it's hard, it's easy. Is that like, I'm just naturally motivated to throw everything that I have, work crazy hours, do whatever it takes to make this thing win. And so for that reason, and maybe that's why, I don't really think about legacy. I don't really think about, what would it take for me to ride off in the sunset and feel good about myself? Because I don't think I I don't think I'd be so fixated on like, you know, how I'm going to be remembered. I think the thing about building a firm is that when you build a firm, before you build a firm, everything's about you, right? It's like, okay, my career, you know, my resume, like I think about the stepping stones of like how I'm going to tell my story to my next employer, or to, you know, the girl I'm going to try to impress, or my parents or my family or whatever it is. And when you build a firm and all of a sudden you have other people relying on you, and that means like employees are like, you know, Haseeb, Dragonfly's got to work. Otherwise, like I'm screwed. Or you have LPs, you know, and the people who invest in our funds, and they're like, Haseeb, you're my crypto exposure. I need this to work. Otherwise, I'm going to get fired. People are going to be like, oh, why did you invest in crypto? And all of a sudden, the responsibilities become much bigger than just, okay, the statue in my head to myself. And that, I think, also is the most powerful motivator, is when you're not just doing it for yourself or for your own ego, but you're doing it for all the other people for whom you're responsible. That, I think, is the other shift that psychologically makes you more capable to do more than you would to just work for yourself. The one big difference between venture and poker, I mean, there's many big differences, but probably the single biggest one, is that poker is ultimately a single-player game. It's a single-player game in the sense that, of course, there's other people at the table, but the other people at the table, they don't give a shit about you. They might as well be NPCs, you know? Like, they're not rooting for you. They're actually, everyone's rooting against you. It's entirely zero-sum what happens at a poker table. If you would make money, they lose money. That's just how it works. Whereas in venture's a team sport. You only win in venture if your founders win. And everybody in your team is working to make those founders win. And so as a result, it's really not about you. It's not about you at all. Like anytime that a venture capital is successful, it's because somebody else succeeded. Mm-hmm. It's because, oh, Athena did really well, or Monad did really well, or Bybit did really well. That's why we made money. And so it's very difficult to have this kind of egocentric perspective when you become a venture capitalist. And I think that's a big part of the reason why it's actually been really good for me, as, you know, kind of maturing as a man, coming into my adulthood.
Is that something that happened immediately? Because obviously when you go to suddenly start managing people's money,
yeah,
it's you go out there, you have to raise funds, you have to ask people to believe in you, invest in you. Was that like a switch that happened straight away? Oh, now I have this responsibility of their money? Or was it something that you sort of came into once you realized how big Dragonfly got?
It was something that I think probably around the second fund is when it really settled in for me, because, you know, the first fund, you don't really know if this is going to happen again. And of course, we raised fund one in the bear market. We raised fund one in 2018 after the ICO bubble collapsed. And that fundraise was so grueling. It took so long because, of course, once the ICO bubble collapsed, people just didn't believe in crypto. It was so difficult to raise that fund. And so we just didn't know, is there going to be a second act? Is this just a one and done? We raised the fund, we deployed it, but like, yeah, crypto isn't really a thing. Or maybe not, crypto is not going to be a thing, but just that, like, yeah, you're not going to get more investors. You're not, you know, there's not going to be an institutional asset class. It's going to be a bunch of weirdos, you know, buying stuff, preparing for the end of the world. And we just didn't know. It wasn't obvious at that time where it was going to go. We believed in it, but we'd obviously been proven wrong in that the market had dumped so aggressively, and all the people who thought crypto was great, they were nowhere to be seen. And so we just didn't know how long this was going to be a part of our lives. But it was after the second fund, that was like, you know, we raised that in 2020 after the COVID stimulus and everything started roaring back, that it became really clear to me, like, no, this is the thing. This is what I'm here to do. And so that was probably when it really clicked in for me that this is going to be a very, very big part of what I do with my life.
Yeah. Yeah, amazing. And in poker, calculating expected value is super easy. When you're playing, however many-handed it is, you've got 4 players, 5 players, doesn't matter. Yeah. You can very easily understand the pot size is X, I'm holding Y, I've got this much in my stack. You can calculate expected values of like what's going to come on the next card, what my implied odds are, all that sort of stuff really easily. Expected value, I think, is one of the guiding principles you have to take when you're investing. But everything's unknown.
Yeah.
Almost every variable you go and pick from is almost an unknown. You don't know if Bitcoin is going to go up over time. You don't know if the industry is going to be there. I mean, back in maybe now it's a little bit easier, but in 2018, definitely not. How do you calculate expected value? Is it something that you have in your head? Is it in spreadsheets? Is it pen and paper? Is it almost like you see it in your head like an artist's painting? Like, how do you actually calculate expected value when you're going out and founders are coming to you and saying, hey, I've got this idea, and you're thinking, okay, has it got PMF? What is the expected returns here? Can I calculate it? How do you do that?
Yeah, it's a great question. So at a poker table, I mean, calculating implied odds and understanding what are the odds or what's the equity that I need to have in order to be willing to call this bet, that is pretty easy. You learn that naturally over time just by playing enough poker. Calculating expected value requires you to have a model of your opponent. It requires you to have a model of how often are they bluffing, how often do they really have it, and what's going to happen on the turn, especially if you're early on in a hand, then the decision tree is so big and so dense that it's actually very difficult to calculate expected value. Like, you're approximating expected value, but there are a lot of assumptions that go into that model. That's more analogous to what early stage investing is like. In early stage investing, but there's actually two big differences. So one is, okay, it's similar in that there's a lot of uncertainty. The decision tree is still really big, and there's so many things that can happen with the business model, with the market, with this particular founder. Like, how much do you really know about them? What if the team breaks up? What if what if Binance comes into this market and launches a competitor, and then they're just immediately killed? So there's a lot of calculable odds. There's incalculable odds, but you need to have a model, right? You need to sort of mentally model, what do I think are the probabilities of any of these individual things? But the reality is that when you're doing early stage, trying to be too prescriptive about a actually mechanical statistical model is usually a mistake. Almost nobody does that at early stage. Now, when you're looking at growth stage investing, when you're looking at Series B, Series C, Series D, then actually it is very numerical. You are creating these valuation tables, looking at different assumptions about, the CAGR and the net margin and this, and you're sort of looking at the valuation matrix, and you're trying to, I think roughly this quadrant is what I expect to happen to this company. But if you're doing early stage, and most of what Dragonfly does is early stage, when you're doing early stage, because early stage investments are not normally distributed, it is not very useful to try to get a point estimate of the expected value. So what do I mean by that? Poker is a normally distributed game, meaning that when you play a hand with somebody, you're going to win or lose money based on a normal distribution. Sometimes you win money, sometimes you lose money, and it's normally symmetrical, right? I am just as likely to win money as you're likely to win money, on average, right? And so as a result, you just get this law of large numbers thing. You're just supposed to, push these small edges, and if you're slightly ahead, on average, you're going to win. And trading is very similar, right? Is that very often if you're doing short-term trading, it's normally distributed. Is that half the time you're going to win, half the time you're going to lose, but hopefully slightly more than half, and you're, on average, you're going to be making some money. Venture is power law distributed. And power law distributions look very different from normal distributions. Because in a power law, that means that most of the mass of the expected value is in a very small number of tail outcomes. And this is actually how early stage deals are distributed, is that there's a lot of startups that raise money in a given year. And there's like 3 startups that make 80% of the money. And those 3 startups are like, Solana, Phantom, and your Monad, or whatever, And if you don't hit those 3 companies, then nothing else you do matters. All the other deals, it's like, oh, maybe I made like a 1.5x, which who cares? That's not interesting. But if I got any of these 3 deals, even one of the 3, then it's a 5x fund. And so almost all of your P&L is concentrated in just one of these few deals. And if you catch one of them, you win. So how do you maximize the probability of catching one of them? Doing an expected value calculation is not going to get you that, right? And so in a power law distributed distribution, all that really matters is looking for what are the signals that I'm in this part of the power law. And this part of the power law, almost all the venture mantras that you hear from venture capitalists, like, oh, you look for founders who break rules and who do this and whatever, blah, blah, blah. What they're really telling you is that these are signals that you're in this part of the power law, right? It sometimes happens that a company that doesn't have those properties ends up being in this part of the power law, but most of the time there's some things that are common patterns of companies that are in this part of the power law. And so a lot of what you're looking for is, I don't really care if my hit rate is, 70% of the time my investment goes to 0, or 80% of the time the investment goes to 0, really does not matter in a venture portfolio, because so few deals are contributing so much of the P&L, because you have a portfolio of like 30, 40, 50 deals that, if I have one more deal that went to 0, who cares? It really just does not affect my portfolio in aggregate that another 3% of the portfolio went to 0. All that matters is, did I catch Monad? And if I caught Monad, all the other mistakes are forgiven. That kind of investing requires a very different approach to underwriting, which is much more looking at these signals of exceptionality rather than trying to do some valuation matrix and put some numbers in.
What is it that you see as the commonalities between those 100x companies?
So there's a number of things that are common signs. There's no science to it. It's much more art than it is science. So one of the things you're looking for is that really exceptional team. Now, exceptional team does not mean a perfect team. And this is a mistake that a lot of early VCs, a lot of new VCs make, is that they're looking for teams that don't have any weaknesses. Or they're looking for teams that have a lot of credentials on paper. Or they're looking for a team that, whatever, has this like arbitrary sign of having done something really good. But that's not what you're looking for. What you're looking for is exceptional teams. And exceptional teams means they're really, really, really off the chart strong at something. It doesn't have to be everything. Almost always really, really great teams have some kind of big glaring weakness. And again, a lot of bad investors will look at that weakness. They'll say, oh, this person, they're crazy, or they're, unreliable, or they never learned how to, they dropped out of school, or they did this one weird thing. And they're not looking for the outside strength. They're looking for the weakness as a reason to say no. And so that is one thing that you see very, very commonly in these tail outcomes, is that you have some kind of, if you think about like that, like in video games, you have like this strength chart is like, oh, strength, agility, dexterity, whatever. And like what you're not looking for is like, oh, there's like a well-rounded, perfect little, pentagon. What you're looking for is off the charts on something. And if they're off the charts on something, that's a positive signal to invest. Second thing is that they really deeply, obsessively understand their market. So they're deeper in like this almost autistic way compared to anybody else you meet about this market. And again, they may not have credentials, they may not have done it before, they may not be like, oh, they're ex-Binance or they're Coinbase or this or that. One of the things that you find actually very often is that the biggest outcomes are not people who've done it before. They're not people who have really deep connections. Whenever you see these like big tech celebrities come into crypto and build startups, almost always they fail. Basically to the last man. I haven't seen a single really successful outcome from somebody who's like, David Sachs started Anchor. I don't know if you guys remember. This is like back in 2018. This was like an RWA protocol, way before RWAs were a big thing as they are today. Didn't go anywhere. Totally failed. Then you had, who was it? David Marcus started Lightspark. Raised I think like $100 million in seed round. Hasn't gone anywhere. Same thing with what was the Autograph? Tom Brady, I think, was Autograph, right? Mm-hmm. Also, didn't go anywhere.
Yeah.
So often you see these big name guys who should have all the distribution, should have all the advantages. On paper, they're supposed to win, and they don't. The winners are almost always outsiders. The winners are always people like, Shane from Polymarket, or, Vitalik from Ethereum, or Hayden from Uniswap. They're almost always like kind of crazy outside randos who are just insanely fixated on their market. And they question some deep underlying assumption about that market that other people do not understand, or that other people do not have a theory about, but they're just so sure that what they see is correct. And maybe as a VC, you don't know. So, are they right? I don't know. I have no idea if you're right. It's like, Hayden, it was like, I think that automated market makers are going to be the way that most crypto is traded on chain. And it's like, really? They seem kind of crappy. They seem like they have bad pricing. They seem like they're very inefficient. Why wouldn't it be order book exchanges like it is in the real world? He's like, no, I'm really confident this is true. And it's like, well, I don't know, but that is a very strong sign that maybe something is about to change in this underlying market, and this person sees it before everyone else does. So those are some of the things that you look for in a really exceptional founder that make you think, shit, I don't necessarily see how the line is drawn all the way out, but this person might be the person who changes the game.
Yeah, that's amazing. Okay, we've got a hard stop, so I'm gonna let you go. And I know you love it when people cancel on you, so I'll let you go. Is there anything you want to let anybody know, where to find you, or any topics that you haven't gone through that you would just like to speak about quickly?
Nothing jumps out at me that I want to plug. If you want to find me, just Google my name. I'm Haseeb. You can find me Haseeb Twitter. Easy to find. Talk a lot about crypto and what's happening in DeFi. We also do our own podcast called The Chopping Block, which we publish once a week. So if you want to find me there and my hot takes, I'm easy to find.
Awesome. Thank you so much for being here, Haseeb. I really appreciate it.
It was a lot of fun.